This is Maj Soueidan with another investor podcast here. This one here, we're going to profile here of one of our members here at Geo. He's done some really good work writing, contributing some articles to GeoInvesting. We love that about Scott. He's never unwilling to talk what he's buying and back up what he's pitching. So you always got conviction, Scott. We like that a lot. So it's gonna be really nice to hear about your journey as an investor. How you found this passion, kind of what we've been doing together here, you and me, a little bit at Geo, and move on from there. So thanks for doing it, Scott.
Good afternoon. Thanks for having me, Maj. Appreciate it.
Yeah, man. So where are you right now? You're actually in Chicago. Are you in Chicago right now? Or you,
I'm in Chicago, my home office, enjoying the summer weather.
Yeah, great. So like you can, right? So,
Yep.
Scott. So what's before we get into maybe talking about your journey and everything, let's talk a little bit about your beginning and everything. What happened, and so how'd you find out about investing? What was your career path? What was your career path before investing? Was it always investing? Just get into a little bit of your background.
Sure. So, I mean, ever since the movie Wall Street, I was interested in the investment markets. That was my inspiration. 1986, I think it was 1987. Now I'm dating myself.
Yeah.
So after college, I moved to Chicago and got a job in the industry and started working in institutional equity sales. I worked for a small local firm in Chicago, and then I moved to Cowan and Company, and I was at Cowan for 15 years and ultimately ran the institutional sales desk in Chicago, Midwest, and then did the same thing for Lazard Freer, also in Chicago. And then in 2014, I left, and I've been running money on my own ever since. And I have another business as well. I'm a broad investor, so I spend like literally 95% of my time on public equities, and then the rest would be in real estate. I have a real estate company in the Chicago area as well.
Excellent. So on the real estate company, Scott, are you buying residential properties, renting them? Are you buying commercial properties? Are you acting as a sales agent? What are you doing?
No, I own residential apartment buildings in the city of Chicago.
Okay.
I used to manage them myself, run the business myself, but I've hired a team of people who now manages all of it. And I just really looking for opportunities, value-added properties, distressed properties. And then I've got a good team that can come in and rehab and upgrade and the like. And then I just hold them, buy and hold, which is very different from my public investing strategy, where I'm more of a trader.
Right. You do. You're like a quasi, fundamental guy, but you like to hold short term. You find these pockets of growth, which I like that a lot. That's how I started my career. Actually, when I started investing, I was all about trying to find that 6 to 9 months of really inflection of growth for a company and ride that if I could.
Yeah, so that's exactly what I'm trying to do.
And it works really well. So now when you were working with Lazard and who was that before Lazard? You said before Cowan. You were basically dealing with what kind of companies? I mean, you were so small cap, right? You were kind of ready.
Generally, it was all caps, but when I was at Cowan in the 90s and the 2000s, the general focus was small and mid cap and consumer technology, healthcare, defense were the areas of expertise of the firm. And so, that became my area of expertise, and that's what I focus on now. They did have large cap coverage for sure, but it was really geared towards small and mid caps.
Okay, so it's fair to say you are a full-time investor, and that's what you are now. That's what you do full time.
Yeah.
And I know I've gone to a couple of your events in Chicago, which have been really nice. where you would maybe talk about that event a little bit, because I mean, I'm sure you'll do it again one day, and maybe you can.
Yeah. I
give
actually
us a little
think I'm going to
background.
do another one in mid-September.
Okay.
I am going to start putting it together really very soon. Um, I got the idea of doing that during COVID when everybody was locked in their homes. And I was itching for some communication and some real world company, I guess you could say. And
Right.
that's how I got the idea. And I thought it would be easy to get 3 or 4 or 5 local Chicago companies and then invite, anywhere from 10 to 20 local investors. And I really wanted institutional small cap investors. And I know all the institutional guys in the Chicago area. And the first event, I ended up getting, I think it was 5 companies. And the idea was unlike a general conference where they go and present and we sit in the audience and we listen and fall asleep, that I would do a 30-minute interview and keep the companies focused on the important topics that drive the stock, right? And every company's got 1 or 2 real key issues and really pin them down on it, and then open it up for Q&A. And it was a home run. We, like I said, had 5 companies. We had about 25 to 30 investors, a mix of small cap institution and then other type investors. And everybody loved it. And we did it again, I don't know, 6, 9 months later. And I think we had 6 companies at that one, with several flying in from different cities. And we had about 30 to 35 investors. And so
Right.
it seems to be, a good event. People like it. And I think if we can do this once a year or twice a year, then it would be well received.
Now, and I can attest to that. How I really like the format. I went to both of them, and I actually, in your first one, you let some of the guests, investors, interview, kind of fireside chat style of the company, which is kind of cool, in front of the stage. So yeah, to set it all. Also, this is during a dinner, so everyone pays for their own way in the dinner. Company pays for their own dinner, or the investors pay for their own dinner. So there's no like fee you're charging a company. And during dinner, there's that we're hearing each individual CEO talk about their company.
Yeah, and I
Questions.
like having the tables where you've got, between 5 and 8 seats, and so you're sitting with a management team, and you can dig further in. And then after
Right.
the event is over, move tables, sit with another management team. It was a good social / educational type of forum.
And then the piano bar downtown somewhere, or that was
Yeah.
all of that. That was fun. Yeah, so I really you really enjoyed that, Scott, about what you're doing. And what I like about it too is you're not charging the company. You're really trying to really have an event where it's, hey, if you're interested, come pay your dinner, get your dinner, and listen to a
Right.
company. So
Right.
I like that about it. And actually, when I was out there the first time, and I think you had Rel Richardson Electronics there.
Yep.
And I went to the site visit there. That was pretty cool because they were in Chicago.
Right.
So I got to too.
Yeah. And it was
that
good timing
fun.
too, because the stock, I think, was in the $12, $13 range on the way to 20 or near 20.
Right. I got the $27, $28. I think it was one of your better performing pitches there. So
Yeah.
I'm just gonna take a little bit of credit for that.
Oh yeah. Yeah. I get all the credit for that.
Yeah, take away and get them, right? But cool. By the way, that stock has come down recently.
Yeah,
It's
it
pretty
has.
sharply. I'm looking at it again here, maybe I don't think it's time yet, but maybe in next 2-3 quarters, take a look at it again. Yeah, man. So this is awesome. So now let's get a little bit about back to you, Scott. So are you active on Twitter at all? I mean, you do some stuff on Twitter here and there, right? I mean,
Yeah, I'm throwing some comments out there on occasion.
yeah.
I've changed my name on Twitter recently, and
I saw that you fooled everybody.
yeah, I've with spam and scams, I've just become paranoid over the past couple of months, and I just don't want the exposure under my name.
Okay.
So I know a lot of people have their name out there, and that's fine, but my attitude has changed a little bit in the last month or so, and so I want to keep a lower profile on Twitter.
Okay. Do you want to share your Twitter handle, please? I mean, if you're
I don't even know what it is anymore.
okay, we'll get it. I got
Yeah, feel free to share it if you want.
Okay. I was trying to throw you out a compliment one day. I'm like, where is it? Where the hell is he? So,
Yeah, it's funny.
yeah. So yeah. So if we talk about maybe, do you think you have an edge? I mean, what in investing? I know I think you do some pretty good due diligence, a deep dive. I think that's one of your edges that I've kind of been accustomed to what you do. But maybe talk about where you think your edges are in investing.
Sure. Well, edges are always tough to find. My attitude is the markets are always efficient, and the larger the cap that you go, they are ultra efficient. Um, Wall Street coverage is, everywhere, right? You got 50 analysts saying the same thing on the same stocks. And so as you go down cap, there's more of an opportunity to find inefficiencies. And where there are inefficiencies, there are opportunities. And
Right.
while one can still miss or get blown up, um, when there's an inefficiency or a vacuum in the marketplace and you do your homework, you've got, I think, a better chance to one, make money and to make some real money.
Right.
And so in the small micro cap portion of the marketplace, especially over the last 5 to 10 years, Wall Street has basically walked away from this segment of the market and has created what I think is a great opportunity for investors like you and myself in this world. And that is where I try to focus my time. And I'm looking for companies that I can understand, and I'm looking for companies that have large market opportunities, large TAMs. I'm really less interested in small niche type of companies, because if they have a hiccup, um, the stock can really get hit and it's harder for it to come back. And so those companies that are addressing large TAMs, while they might have a hiccup, it could just, the market is so large. If their product is legit and real, and then, there's a real opportunity for it to come back.
Okay.
Um,
And so
and I
so
spend,
go ahead.
I try to spend my days talking to management and really get to know management. And of course, in this world that we are in, the CEOs and CFOs of these smaller cap companies that don't have any coverage, they love talking to us. They relish the opportunity to spend time with an investor who is willing to listen to their story. And
Right.
so that to me is really important. And I try to get to know them. And then I also try to help advise, if I were to move forward with the stock, I do try to advise them and help them, because a lot of times these companies are clueless when it comes to marketing their story. They don't have Wall Street coverage to help them. And they need that guidance. So in an unofficial capacity and with no fees, I try to direct them, help them get that exposure in order to, get the multiple to expand and get their stock price up. So
And it makes
that's kind of how I go about it.
how do you find your companies? Are you using screens? Are you reading press releases? You have a network of investors you deal with that you try and like bounce ideas off of each other.
Yeah,
Maybe it's a little of everything here.
it's primarily the network that I have. Um, I don't run screens. I probably should, but I don't. It's really just, it's conferences. Like for example, LD Micro, and I'll throw a plug out to LD. It they're all taped, right? So I'll go to the events or I'll watch the stream, but then I'll also go back and watch the replays of as many companies as I can. And I don't need to listen to the whole presentation. I just need 3 minutes and I can get an idea if this is a decent idea and if I want to pursue it further. And
Right.
then what you do, I read your work and I watch your videos, and that's always very helpful. And then there's other conferences that focus on small and micro caps, and I try to get involved in each one. And like I said, I only need a couple of minutes to see if the idea is worth my time.
Right.
Um, and then that's primarily how I find my ideas.
The one thing I noticed about you too, you like really understand financials really, you dig deep into the financials, right? I mean, that's a big
I,
part of what you do.
I try to, and again, I only need a couple minutes to look at the financials to see if there's something worthwhile. And so I can easily screen out companies. I'm looking for one, revenue growth. I'm looking for size revenue. I don't want a company with 5 million in revenues. That's a waste of my time. Even though the stock might be cheap, it's just so small that there has to be, I need a company that has a sizable enough revenue base that people will care. I don't want the company to sit in microcap purgatory for 6 months or a year or 2 years until it gets recognized. I don't
Right.
I don't want to wait that long. That's just not my style. I only got so much capital and I want to put it to work immediately and have it grow. So
Right.
and we've talked about this before, ideally a larger company from a revenue perspective that has fallen on hard times and the valuation is contracted and it just needs to be fixed. It just needs
Right.
to be repaired. And then if they can repair the operating business and you got the revenues, then you got an interesting situation.
Yeah. And
So
I think,
I was going to say, I'm sorry, I want positive revenue growth, positive EBITDA, and preferably expanding margins and preferably positive earnings.
okay, perfect. Now I think that, and I think that's a really good formula, especially today, in today's market, where,
Yeah. Yeah.
it used to be everything goes up, and now those things matter. Earnings and EBITDA
Right.
growth matter a
Right.
lot more than they have in the past, at least from. I mean, they've always mattered to some degree, but I think investors care about them more now, and they'll place more value on it.
Right.
Now, so one thing you mentioned there that I agree with you 100% on is, even though I'm a little different than you, I will invest in speculative stuff, like the smaller companies,
Mhm.
but with minimal revenue. However, I do think like the next bull market we're entering in right now, or we're kind of in already, that in the smaller cap arena, in nanos or micros, that it's going to be that area you're talking about. They're going to get a lot of play. These we call it a geo, big cap microcaps, big cap micro. These
Yeah.
are like big cap revenue type companies selling as nano caps or micro caps.
Yeah.
And we think that's where a lot of the money is going to go. They're probably a little higher quality. So that's where if people are going to invest in these smaller cap companies, they're going to probably want to invest maybe in those companies.
Yeah.
And it's really working well, for us. And I think you've had some too that have worked out well.
Yeah.
So that's really, and there's a good amount of companies that are in that fishing pond that we can go take a look at.
Yeah.
Not only in the US, but in Canada. I think you invested in a Canada company also recently that
Yeah.
was just like that,
Yeah.
$1 billion company. And,
Yeah. Those are the best situations. I think that you said it very well, the big cap micro caps. And I mean, a couple that worked really well off the top of my head, carparts.com, Destination XL, the Canadian company, Datacom. I mean, those are really, really attractive situations where you get a new management team coming in and they're able to transform the company. And all of a sudden, you've got a significant improvement in the operations, which can drive a significant improvement in the valuation.
right. And the cool thing about these companies too is they've probably been around for a long time, so they've been through different economic environments and kind of survived. I mean, they're still sitting there just waiting for some kind of new change, right?
Yeah.
And that's what I love about those too. Now,
Yeah.
do you own any of those stocks? I mean, for disclosure purposes yet? And then you mentioned a few of those stocks.
I'm out
Do
of
you own
all
any of
those
the ones you just
stocks.
mentioned? But okay, I do own Datacom still, by the way. So,
And it's paid
so
up handsomely for you too.
yeah, it's done well. I think it's going to go higher for the record, but we'll see. And the symbol on that, by the way, everybody listening, is DCMDF on the OTC, and as I don't know, is it DCM.TO? I think.
Yeah, I
Or
believe so.
.V or something.
Yeah.
Canadian, yeah. I was spending a lot of time investing in these Canadian stocks recently, Scott. And I've always been shy of, about investing in Canada for many, many years. And maybe the last 7, 8 years, I've gotten more involved in it. And it's not all mining companies and development stage companies. There are some really nice companies.
Yeah, the market has changed quite a bit. I agree with you.
Yeah. And there's a lot of big cap, micro caps on the Canada exchange. So, but one thing I noticed with you too is, if you like an idea, you will take a pretty big bet sometimes. I mean, you have some high conviction, you back it up, right? Is that
Yeah, that's my MO. I swing big when I find an idea that I like. But
right?
all the stars have got to align. You know, it's got to be a company that's growing, and I've got to feel like I know management too, because that's just so critical. And I want that information flow.
Right.
Um, and if management doesn't know you, if you don't really know management, they're not going to share.
Right.
And that's really an important piece to the puzzle if you're going to take a big bet.
Right. And do you think your bets have gotten bigger over time as you've grown in as an investor, or were
Hmm.
you always pretty much of a high kind of concentration investor?
They've definitely gotten bigger
Right.
over the past 2 years.
Right.
Um, and yeah, it depends on the conviction level. And I've had a big bet on for the past 2 years. It's the longest I've ever held one stock, and that's Assertio. And I've talked about it on your site and numerous other sites. And my conviction level is as high as it's ever been. In fact, I think it's a better story today than when I first bought it at $1. And I've never made a bet this big. I mean, some would say that it's criminal, uh, given the size of my portfolio.
Yeah. Well, I think it's about $5 now. I think it got as high as 7, didn't it?
Got as
Recently?
high as 8.
Oh, 8.
Um,
Okay.
yeah, it sold off post 8, as low as 5, in conjunction with an acquisition, which created some hair, as you'd expect, created some noise, some uncertainty. Um, and then there was an ARB situation, and we are coming to the end of that this week. In fact, Thursday.
Okay.
And Thursday, we'll see if the deal closes. I think it will. And then they were moved up their earnings date. Typically, it's around August 9th, and they moved it up to August 3rd. And I'm hoping that means they're excited to report their quarter and talk about the closure of the acquisition and what the combination will do.
Beautiful. Now, while we're on your stock picks, I mean, I was going to do it later, but we're doing it now. Yeah, I think you also were talking about taking a look at PPSI. Is it Pioneer
Yeah,
Solutions?
yeah. So I own
Um,
the stock. I've owned it for the
okay.
past, I don't know, 3, 4 months. I started buying it at 4, and I think it's trading at like near 8 right now.
Yeah.
And I found this idea from the IR guy who um,
Brett
knows
Moss.
me, and yep, yep, and I'm
Yeah.
friendly with, and I credit him, and I appreciate, him pushing me. And typically I don't do the flavor of the month kind of uh sector. So I don't do cannabis, I don't do solar, I don't do EV, I don't do AI. I don't believe in any of it. They may work, not my cup of tea.
Right.
Um, and the reason is the volatility, and I have no idea if it's real or not. I don't know if it's day traders bidding these things up, and then tomorrow when I wake up, the day traders decide to move on to some other sector, and these things are down 50%.
Right.
So anyway, credit to Brett Moss. He pushed me. I met management at the Planet Micro, and I've spoken to him a few different times since. I really like the CEO a lot, and I think he's got a legit business with limited to no competition. And I mean, what really struck me is when he told me that the demand, the demand side of the equation is off the table. It's not an issue. They're finding so many end markets, use cases, that it's a zero concern. That his
Right.
biggest concern is the ramp of capacity. So
Right.
when I heard that, my ears really perked up. And then on top of it, they're growing their revenues 100% a year. They are profitable. They were free cash flow positive in Q1. They have no debt. CEO owns 20% of the company. They have a tight float with 10 million shares outstanding. And given what I just said, I think this is the kind of business that can trade at a 5 multiple on revenues. I mean, in the good
Right.
old days, this would trade at 10 times revenues, right?
Right.
So right now it's trading at 1 times revenues. So I feel like the risk reward is just off the charts good. And if it should get to 5 times, that equates to like a $35 stock.
Right.
mean, if it just goes to 2 times, I have a winner on my hands.
Or they have two products are selling, right? Is e-boost and e-block, right?
Yeah, yeah,
Yeah, and I think one of them is, I don't know which one is what. I think the one of them is basically like a portable, I guess, charging station, right? For
yep,
electronic EVs, right?
yep. So that would be E-boost.
Okay.
And then
And E
E-block is a grid on a skid.
right. Which is
So
pretty
you
awesome.
think Texas, Texas electrical system seems to go out every summer, right?
Right.
So, so if you're a retailer, and just to use a real world example, they signed up Walmart and they've deployed so far, as I understand it, in about 60 Walmarts across the country. And I think they've got, thousands to go. And you're in Texas and you're worried about the electrical system going out. This is a natural product for a Walmart. And that can be applied to any retailer, restaurant, or whatever, in any market. So it seems like, a very, very large TAM. And I don't know anyone else that's doing what they're doing. So I
It's really
think,
putting all the electrification in one device or one kind of
yeah,
structure, right?
yeah, basically
Yeah,
creating a mobile transformer.
right. Pretty awesome.
Yeah. And so I
Yeah,
think it's perceived as a EV play. And I don't like that. I don't call it an
right.
EV play. I mean, I know right now today that is a large part of what they're doing, but I think in a couple of years, that's going to be a small portion of the business. This is the electrification.
Right.
Uh, they're taking electrification off of the grid.
And what's nice about these guys too is like before this particular focus, they did build a company before this, in the similar kind of industry. I guess power solutions, maybe with generators, if I remember correctly. And that market got a little competitive, so they had to end up like selling it, I guess, because it wasn't really as profitable as they wanted to be. They sold that for a good amount of money and pivoted into this thing. So it's not like he's new. The CEO is new to this
Yeah.
business, and he kind of succeeded in the past. So this is kind of cool that he's doing it again here, hopefully.
Yeah.
And I
I
think
think in the end, they sell the company. I think they sell it to a larger entity. You've already seen them make significant headway in the auto space with, I believe they've signed some with GM and Ford, and I think at some point you're going to see Tesla, and that'll really put them on the radar.
for
And then when I
sure.
look at the numbers, I mean, this is a legit company. They're going to do 40 to 45 million in revenues this year, and they're going to earn a dime. And they've got no debt, and they've got 10 million plus in cash, free cash flow positive. Where do you find that in the microcap marketplace? Selling
Right.
into a sexy space like this, a sexy hot space with a growing TAM. And when you talk to the CEO, when he tells you that the demand side of the analysis is off the charts, it's pretty
Right.
rare.
It is. I think my thing with them was like I wanted to see how profitable they can get. I mean, I know they're going to grow their revenue pretty nicely,
Yeah,
and I think eventually earnings are going to catch up. I just don't know if it's this year, next year, right?
yeah,
But if you wait in this kind of business that it's in right now, and it's going to get probably it's in a sexy area. It might
right.
trade well ahead of its 2024 numbers, I think, which is earnings really start escalating, right?
Yeah, that's
So,
exactly right.
and that's a dilemma now. Is it going to trade on revenue ahead of earnings, or is it going to wait? And I think is a good chance. It could definitely attract an interesting crowd here,
So
ahead of earnings.
every stock has its own story, right? And there are some situations where I think it can trade on revenues, and because it's a story stock, so to speak, it could trade at a high valuation, a high multiple of revenues. And this is actually profitable. They're supposed to earn 40 cents plus next year. So that's a
Right.
real EPS number, right? But this is a sexy story the whole idea of distributed generation, distributed electrification. That's why I think it can trade at a high multiple of revenues. That's why I think it can trade at whatever, pick your poison, 3, 4, 5 times
Oh,
revenues.
I think it can get pretty silly potentially. I mean, especially if they're
I think so
profitable.
too. Right.
And I
And so
think,
considering it's trading at 1 times, it's not going below 1 unless they really
right.
screw up.
Yeah, I think, yeah, and I mean, revenue is not an issue here. And if he can start proving that he can maintain margins, couple quarters, I think you're going to see really interesting. I do own a little bit of this stock myself too, by the way. Just I should say that, not nearly enough. Brett's going to be mad when he hears that. But he was calling me too. I wasn't actually sold on it, at the very
Yeah.
beginning there. But we'll see how things turn out. Good. So Assertio, I guess, and PPSI, and I think BKTI is another one of your favorite picks, right now.
Yeah, it is.
Which
Yeah.
which is handheld kind of emergency devices, I guess, or rugged
Yeah.
devices, rugged
First
communications.
responder radios.
Right.
So think wildfire. When you're in if you're a firefighter and you're in a forest and there's no cell towers and you need to communicate, you need a pretty darn good radio. So
Right.
think police, fire, EMS, et cetera, et cetera. So all the first responders carry these radios, and there's essentially 3 players in the space. Motorola Solutions is the 800-pound gorilla, BK Technologies, and then L3 Harris. And then there's a couple of smaller mom and pops.
Right. And the really, what you're excited about here is really they're basically rolling out a whole new version of their products, which you think is really going to put them on the map here in terms of revenue growth and profitability.
Historically, I would say, with all due respect, that it's been a pretty sleepy, unsuccessful company for years and years and years. And
Right.
and I remember seeing the name and what they do years ago, and I don't know, that's kind of that's the extent of the work I've done on it. And then I saw them present earlier in the year at a conference, and I like companies that are going through a change or transformation and driven by a new CEO or new general management team. And in the last 2 years, this company, summer of 21, got new CEO, new CFO, new CTO, and the entire CTO's engineering team. And they happen to come from Motorola Solutions.
Okay.
And to me, that really perked up my ears. And had a conversation with the CEO, and turns out he formerly ran one of those small mom and pops in the industry. So he's got a 30-year plus track record in the industry. So he knows the business.
Yeah.
And then when I learned about the product cycle that they've got, and it's not just one product cycle, it's a triple product cycle. So their core product is called the BK5000, which is a narrow band phone. So it only addresses 2 of the 4 bands that are used in the field. And that product rolled out initially in 21, but because of COVID, it was a slow rollout. And on top of that, they had supply chain issues, they had component cost issues. So 21 was a wash, 22 was essentially a wash, but you could see in the orders, you could see the ramp. They just couldn't deliver the product. So so they were finally starting to deliver the product in 22. They delivered 10,000 radios. And I'm sorry, in 21, 10,000 radios. And then 22, they delivered 25,000 radios, but generally at an unprofitable rate. And they've guided 23 to 32 to 36,000 radios, and the profitability is ramping very fast. And meanwhile, they got approval for their next gen phone, the 9,000, last month, and that is their first multi-band phone, multi-band radio. So it addresses all 4 radios, and it now enables them to address 85% of the TAM. So they only previously addressed 15% of the market. So this is a game changer. So you've got these 2 new radios now on the market, launching, ramping, and then you've got a software product that is gravy, which is launched into the marketplace and they're working on selling. And that's an 80–85% gross margin SaaS type product. And I think that'll start to impact the P&L in 24 and beyond. Well, so I like what I see on the top line and all the problems they had during COVID, the supply chain issues, the component cost issues, they're behind them. So you're going to see the operating line improve dramatically with margins bottoming in the second quarter, third quarter of 22 at 14% gross margins. They did 26% in the last quarter. Management's guiding this year to 35%, which means they'll do north of 40 in the back end of the year, right? And they're
Right.
guiding 25 to 50% gross margins. And by the
Oh,
way,
wow.
Motorola's margins are north of 70. So you got a significant acceleration in revenue growth, a big gross margin expansion story, and they have a clean balance sheet. So the earnings power is pretty significant.
Excellent. And I think we met the CEO in Miami a few weeks
Yeah.
ago. You had
Yeah, we
you did
did.
one of your things there.
And
Yeah.
we met the CTO.
Yeah, we did.
Yeah.
That was a good time.
And I would say that was really important to meet the CTO because I had never met him before. And what struck me is he's
Right.
a 35-year vet of Motorola Solutions, right? He ran the engineering over there, and he and his team moved over to BK Technologies a couple years ago. And his comment that stuck with me was the 9000 multiband phone is the first real threat that Motorola has seen or will see in the franchise's history. And so this is not a bet that they're going to take market share from Motorola. That's just not going to happen. Motorola is IBM. You don't leave IBM, or at least historically.
Right.
But this will enable BK to gain not share is not the right word, to capture greenfield in the rural and the suburban and the tier 3 markets and knock on the door in the tier 2 markets.
Right. So
And
there's
that's
some markets that Motorola really is not targeting because they're just too small, right? And that's where they're
Yeah,
going to
exactly. Or there are markets and municipalities that can't afford Motorola's phones because they charge $7,500 for a radio, where BK's new 9000 multiband radio sells for 2,500. So if they're on equal footing technologically, then this price difference should really have an impact.
Beautiful. Awesome. Yeah, well, let's get back to your strategy really quick here before we wrap this up. A few more things, Scott. I know you've got to go work out. I didn't forget that. You got pump some iron. But you still owe me a tennis game too. My knee's feeling pretty good. So
Anytime. Mine is too.
You're mainly fundamental analysis. Do you do any technical analysis? Do charts matter to you? Do you look at momentum?
Yeah.
New highs, these kind of things.
Well, I don't like buying new highs. I am an armchair technician, and I typically like cup and handle patterns. I like stocks showing a bottom. I don't buy new highs. That's not my cup of tea.
All right, so we're a little different there. I do a lot of them. I'll do a little both, but I do a little momentum investing here and there. So
yeah.
But I just in terms of when you scale into position, are you going all in right away? Are you kind of, or does it matter? Or do you get it slowly? How do you usually size your positions up?
That's a tough one. It depends on the situation.
Right.
I'll usually want to take a meaningful position pretty quickly, just because I'm excited about it. Sometimes I got to check myself.
Right.
And hoping for a pullback, and then I would fill in the position. It really just depends.
Yeah, I think I kind of the same way. I mean, if you're buying something that's really undervalued, why? I mean, you kind of want to pay up for it, and potentially, it's only a matter of time before someone else does find it potentially.
Right. I like stocks where I've got an immediate discrepancy in what I think the fair value is. And so the ones that we've talked about today, Assertio, Pioneer Power, BK Technologies, I feel like the stocks should be trading at a higher valuation and therefore a higher price today, right now, relative to where they actually are trading at.
Right.
And then hopefully, there's more valuation upside and EPS upside from there to take the stock even higher.
Excellent. So anything you avoid particularly, Scott, invested you and will you invest like in banking, oil and gas
Mm,
resources?
No, no, no. I try
Okay.
to stick with what I know that's easily understandable. Um, yeah, I'm not that smart, so I gotta stick with what I know. And I don't like to do
Okay.
fads. If AI is running, it's the next great thing. That's not that's not what I invest in.
All right, cool. Um, any kind of like war stories, like a really bad situation that turned out for you? You recall in your history? Oh,
I
maybe
try to
not.
forget. I try to forget those quickly.
I mean, were you investing in '08, and through that whole crisis, right?
Yeah, yeah. But I'm like a goldfish. I immediately forget bad situations.
Okay.
Yeah,
Okay.
08, I do remember was a rough year. It was very emotional and painful to come in every day and see the portfolio and watch things not only in my own portfolio but globally melt down. But
Right.
you gotta come in and look at every day with a fresh set of eyes. And 09 and 2010 and 2011 were good years.
Yeah, yeah. Just gotta have a little money to play with while you gotta survive. As long as you got something to play with, you
Yep.
can come back in this
Capital
market. Great
preservation
about
is
it.
really capital preservation is critical. And I'm not afraid to sell. If something is not working, I have no problem trading out of the stock and taking the loss. I like losses. Losses are
Right.
important. Yeah,
Okay. Okay. Interesting. Okay. Well, yeah. Well, it allows you to move on. I know
it
that if you take a
does.
listen, if you
Yeah,
it's like a bad, relationship.
right,
It's harder to break up, but when you break up, it feels so
right,
good, right?
right.
And
I mean, one
let you
one thing I found in meeting people and networking in this microcap world is that they hold on to things for a very long time, hoping that they come back, waiting for the market to recognize their great opportunity. And
right,
you know that works, but in a lot of cases, it doesn't work. And I
right.
don't, I want my capital to work for me. I don't want to wait. And it's like watching paint dry sometimes.
Yeah. I think one thing is I was read this tweet before about I forgot who it was, but everyone's always looking for the multi-bagger, but doubles and triples and singles consistently are good too. And nothing wrong with those while you're waiting for a multi-bagger here. So I mean I do believe that there's a nice blend of short term to longer term investing. You've
Yeah,
held
I
AS,
think that's right.
you've held a certainty over 2 years now, Ethan. So you
Yeah,
are willing to go outside your comfort zone and do that when you see it.
yeah.
But I do
And
like that
frankly,
you're
while Assertio has worked, I started buying it at $1, went as high as 8, it's 5.5 now. And the valuations actually contracted during that time frame, which is bizarre, right? So the numbers have just gone up and up and up, and the valuations come down. The truth is, it hasn't worked that well. I mean, the stock is so undervalued relative to its the growth that it's had, relative to its peer group. I mean, if you look at the numbers, I think they're mind blowing. I think the stock should be trading between 10 and 15 today.
wow. Well, I hope it does. I don't know if I for purpose of disclosure, I may own some still. I'm not sure, but I know
Well,
I
you
want
should buy
to.
some now.
I did make money on your pick though, so I do, even though it wasn't a big pick. And you and I used to go back and forth in this, and I guess I
Well, let
ate.
me let me give you two seconds on this, okay?
Sure.
So historically, this has been an EBITDA story, right? New management came in, he had this base of revenues, and he's growing the revenues, but they cut expenses significantly, and that drove a substantial change in EBITDA. And so they did like 40 something million in EBITDA. I don't have the numbers in front of me, but they've grown the EBITDA 40 million plus in 2021. 2022, they grew it again. In 2023, they're going to do about 100 million in EBITDA. Okay. And that's great for sure. And that's why the stock has gone from 1 to 8. And
Hmm.
but it's never screened well from a revenue perspective. Okay. So the story's always been they're going to make a transformational acquisition. And
Right.
it took a long time for them to find a quote unquote transformational acquisition. They did a couple of smaller one-off type of deals, which really didn't meaningfully impact the P&L. So the P&L has been driven by one product called Indocin, which is a good product, and they've grown it from 50 million in revenues. They're going to do this probably 110 million revenues this year, but it doesn't have a patent. And that's a big concern, and why investors are leery of this story, and why it trades at such a low valuation. It's trading at like less than 3 times EBITDA right now. So they finally announced this transformational acquisition a couple of months ago, and the stock initially went up on the news, and then that's when it hit 8, and then it came down, and it's traded as low as 5. It's trading at 5.5 now. But assuming they close this deal, which is scheduled to close on Thursday, you roll it into the P&L. As you look out to the balance of this year and 24, all of a sudden, this is going to screen really well. They're going to grow their top line north of 30% by adding in the products from this acquisition. And then in 24, they're going to grow their top line 50%. And the
Wow.
impact to the EBITDA number is going to be significant. And with the valuation where it is, my hope is that with that kind of revenue growth, it'll raise the investor awareness of the idea, and there'll be a shot to get that multiple from where it is now, call it 3 times, 2.9 times. The industry peer group trades between 8 and 12 times.
Right. So it's a huge expansion opportunity there.
Huge. So
Yeah.
that's why I'm so excited about it.
Excellent. Thanks. And again, your conviction comes out. So thanks, Scott. This has been awesome, man. Again, with Scott Weis here, Semco Capital. That used to be your Twitter handle. I don't know what it is anymore. So we'll get on this. We'll get on the screen though when we publish this.